All right, everybody. Stocks by the numbers. Welcome back. I know it's Monday. Market just closed, coming off of the holiday weekend. My apologies for not coming to you earlier, but honestly, I didn't have much to say, and I always said that I wouldn't just pollute the channel with random updates and analytical videos just to help out the algorithm and whatnot. But here, I wanted to do a quick update. Here, I wanted to look at XPeng, ticker symbol XPEV, and I also wanted to look at Biora Therapeutics, ticker symbol BIOR, which announced an offering today. Stock took a hit. But here with XPEV, if you recall, I think the last video was back here. I mean, I can double check the channel. I may have done a slight update. Nope, October 31st. So, of course, right before it rallied and it exploded up, right? So, yeah, it was around like 15 and a half. And I said that, in my opinion, the company's been struggling. We looked at the previous quarter before, and we can see a slight beat on the revenue side. But the losses widening, in my opinion, was what was really going to keep the stock down and potentially keep us, in my opinion, from entering the situation. Now, again, this is just the way that I'm looking at it. But again, the previous quarter before, you can see a nice big miss on the top and bottom line. So in my opinion, I wasn't expecting much. And of course, the market rally basically began the next day for the last 6 months or however long it's been. And we ended up climbing up. And then earnings came out. As you see, big miss again, top and bottom line, even though revenue did jump up to above that 1 billion mark. So, not the worst report in the world, but the loss is widening again. And in my opinion, we saw also at around the same time here, I think maybe like right here, after we broke out above this top trend line here, you can see we were in this downward channel. We broke up above the trend line, then we pulled right back to it. And I think it was like maybe one of these days here, I may have mentioned in the Discord, oh, we're back in the range, right? We just rejected off the top, so we may start to pull back and sell off. And what happened was the company came out and deliveries were up above analyst expectations, and boom, the stock ended up running up, as you see here, to above $18. Then from there, we absolutely fell off a cliff. And you can see right now the stock actually was up today, but closed at 776, up 8 cents, a little over 1%. But you can see now we're very close to those 52-week lows that were hit recently. So what's going on here potentially, in my opinion, the way I'm looking at it? Also, before I get into my thoughts, we'll look at this previous quarter as well. The company apparently cut some cost and was able to come in well above analyst expectations on the EPS side, as you see here. Analysts expecting a loss of almost 42 cents a share. The company posts a loss of only a little over 21 cents a share, beating that estimate by almost 50%. They beat on the revenue side as well, 1.838 billion on estimates of 1.781 billion, beating by over 50 million, or roughly 3.25%. Now, technically, that was a good quarter, right? And in my opinion, what I would like to see is that it wasn't just for this quarter, right? So we have to see now moving forward Q1. Like, see here, these estimates are a loss of minus 33 cents. We're looking at an approximate date here of about the third week of May, so about 7 weeks from today. But we're looking for a loss of 33 cents, right? So if they really did cut costs, and moving forward now, the loss is going to be more narrow and be trending more towards flatness and potential positivity, then right here, if you post 21 on a loss of 42, then you should basically post the same, if not better, next quarter, right? So in my opinion, that's what I'd want to see from this point. And I appreciate the fact, it went up after I said, in my opinion, it would go down, and then it ended up really going down. So I guess you can say that I was right. But what basically just looking at the situation, in my opinion, it's not about right and wrong. It is about, is the company actually doing what it's supposed to be doing? And now that revenue has been coming in, now we've hit, again, the billion plus mark for the last 2 quarters. So now you need to start fighting back towards flatness or net income positivity, in my opinion. So that's why I'm saying, if you were able to beat by that much of a gap here, then moving forward now with a loss estimates, a loss of 33 cents a share, this company should post a loss of like 18 cents a share. or at least, stay in line, maybe, loss of 20, 21 cents, but they should come in more narrow than these expectations. You understand what I'm saying? If we really did turn costs around. So now we fast forward roughly 7 weeks and the company posts earnings and all of a sudden we're back below estimates and we just posted a loss of like 40 cents a share. Well, now we know that this was potentially a fluke, or any costs could be potentially viewed as very short-lived, and we may now have an even more concrete story as to why the stock should continue to go lower, in my opinion. You understand what I'm saying? So we'll have to wait and see, but very decent quarter here, coming in above these expectations. And overall, what I was looking at as well, you can see the revenue started to chunk up the last couple of quarters. But also what I was looking at when we last looked at it was the fact that 3.99 billion for 2022, company lost 1.36 billion, right? Now we fast forward a year later and we bring in a little over 300 million more in revenue, and we bring in 4.33 million. Yet we lost 1.36 billion, and on more revenue we lost 1.46 billion. And this is why, almost similar to a situation like a laser, right? Luminar Technologies. Almost similar, where if the losses are so heavily outweighing the revenue coming in, where it's even to the point that the more money you bring in, the more it costs you. If you can't get those costs in line and start to narrow those losses drastically, what's happening is you're essentially losing $1.50, $2, $3 to bring in that dollar. And we've seen more times than not, it does not work out well for the stock, and it continues to drop down, lose value, potentially hit new lows. So, in my opinion, decent quarter here. Overall, though, I did mention in the past, and again, this is just my opinion, but overall I mentioned, me personally, I would not be a buyer of any of these Chinese stocks right now. I just think it's just the wrong place to be, in my opinion. But, I've personally looked at other stocks like Alibaba, which looked, in my opinion, very attractive in the numbers. And the stock continued to go lower. You understand? So if this sector is under pressure, then we may not really have any urgency for like the next... I don't know, but even if you think they might turn around, because I know it's 2024, it's an election year here in the States. So if you think, after elections, it may turn around for the Chinese equities, well, then technically you still have like 7 months, right? So that's why, unless, in my opinion, they're really growing nicely and consistently beating estimates, in my opinion, you may not really have any urgency to buy these Chinese equities for potentially the next 6, 7, 8 months, maybe even longer. But only time will tell. But what's bothering me here personally with XPEV is that I feel like, because they mentioned also that they're lowering prices to try to compete with other EVs, right? So I can appreciate that because, you want to sell yours. But also at the same time, I feel the company is not really in that situation financially where they can do that, where they can just undercut all of their competitors and have that one metric. Oh, look, deliveries are up, so we're doing well. You understand what I'm saying? So in my opinion, undercutting the prices just to bring up the delivery number, I understand you want to try to feed off of that catalyst and try to make it seem like it's more positive than it may really be. But again, if they're doing that, then they're technically shooting themselves in the foot, in my opinion, because now they're bringing in less revenue, right? Because they have to lower their prices to compete, which would translate to either the same or potentially wider losses down the road, because now you're bringing in less money, but you're still doing the same work, right? You still have the same costs to make that vehicle, but now you're just saying, that company's charging 26 that. Oh yeah, we'll do it for 23.5, right? All of a sudden you start chunking down these prices. And in my opinion, the way I look at it is, unless you really have a high profit margin on, each product that you're producing and selling, then in my opinion, it's like the old saying, you get what you pay for, right? So if you are bringing a more superior, finer, uh, more refined model to the market, and you think it's worth X, then that's what people will pay for. That's what people should pay for it. That'd be like, I know I always go back to a company like Hershey, but I know it's a popular name that people know. But that'd be like a situation like Hershey where they to make a slight profit, they have to sell a chocolate bar for $1, let's say, and then they're losing market share and they're losing popularity, so they slash prices down to 90 cents a bar. And now they're taking a loss of like 7-8 cents on a bar, but it's okay because sales numbers are up. You understand what I'm saying? In my opinion, all that's going to translate to is just more of a problem. And what a lot of these EV companies have been saying as well is that they're expecting 2024 to be a very, very rough year. They're expecting demand to be down, sales numbers to be down, obviously profits and everything else will follow suit and potentially be lower. And of course, you had Tesla saying something like that as well. So this is what I mean. If they're all about to take a hit and now bring in significantly less than they were bringing in, if it's, I know I'm trying to say like 4 ideas at once here, my apologies, but if the big man on campus, which is Tesla, if Tesla is forecasting a demand slowdown and potential stagnation for 2024, then in my eyes, it really should only translate as a worse story for a smaller company. And that's why, in my opinion, I think that XPEV, I think it goes lower. I think maybe on the technical side in the short term, we can come back down to the 751, 52-week low, and it could potentially form that double bottom, and then have a bounce back to this fib. This is a 1-year chart. And bottom fib right there, 857. So that's what I mean. On the technical side, in the short term, you could potentially have a 751 double bottom, and then it could have a bounce for about a point back to the fib. So if you wanted to try, to time some calls potentially, it's entirely your own prerogative, of course. But in my opinion, I think even if that does happen, I think that once it'll hit the fib or potentially meet up with the 20-day, I think it'll have a rejection somewhere in there and potentially start to drop even lower. But I don't know how low they'll technically bring it. Because again, like I said, we did just technically have a pretty decent quarter. And that's why I'm saying, moving forward, I really don't know if the revenue in this situation is more heavily weighted than the losses that the company has been taking. And that's why I mentioned the EPS side first. Because I think, again, next quarter, like we could flatten out and we could just stay flat here going into this next quarter. Because everyone may be waiting for these EPS numbers to see if we're, in line and did we cut the cost and are we having more narrow losses, or is it back to the way it was and now we're going to lose over 40 cents a share and we're going to drop down and it's going to get even worse. So only time will tell, but we can see estimates 846 million in change. Quarter prior, they brought in less than 600 million. So let's see here. Wait, 1, 2, 3, 4. So yeah, that's this quarter. Brought in 587. Estimates were over 726 million. So was a big miss this time last year, going into this May quarter, of course, roughly 7 weeks from now. But we can see that this time last year, the company was really struggling on both the top and bottom line. So that's why I'm saying, if revenue could even kind of be close, but they don't post a wider loss, in my opinion, it may actually get some stability here and could maybe even run back up into the 9s and potentially you can see 10 if markets, stay up. But in my opinion, based on the losses And, but again, before this quarter, the company was very, very inconsistent and was missing by wide margins. So that's why, again, just to remind everyone, we are technically near market highs. So a company like this, in my opinion, with a market cap of about 7.7 billion, with big losses, very volatile. In my opinion, if markets do enter sell-off or correction territory, I think something like XPEV could really sell off and take a hit. I think, again, that's if markets really sell off. I think, in my opinion, we could maybe even see this down in the fives. Like, this could take like a two point haircut real quick and could drop down to like 5.5, 570 and change, in my opinion. But again, on the flip side, we could maybe hit new lows, but we could maybe kind of hang around that 7 mark going into these earnings. Because again, in my opinion, this quarter is more important than this quarter. But this was a very good quarter, in my opinion. So, I do have to give credit where credit's due. The company was struggling for a while. Boom, they come out with a really nice quarter. But also, there was an analyst downgrade here. Let's see, do they mention XPEV here? There's a Tesla. XPeng Advance. March delivered climbed almost 29% from a year ago. XPeng also plans to enter other markets outside of China, including France, Italy, and the UK. So, that's all good, but, what raises a red flag for me is, like you started out in China, you know what I mean? And China is a pretty powerful market on the consumer side. So, if you're in like one of the bigger markets, but you're not beating estimates in your own original market, then, who's to say you may be successful in Europe, in the UK, in Italy, France, wherever they're going. So, in my opinion, we'd have to see how those numbers actually start to trickle in from Europe to see if there is demand for the models that this company brings to the table. But, again, I just don't know personally, in my opinion, if I would like take losses or take less profit on my product just to say that I'm a little bit cheaper than the competitor and I can undercut the price and you should buy from me instead of buying from them. In the short term, it could be a positive because delivery numbers are up, but in the longer term, you may be essentially shooting yourself in the foot because you're already struggling and taking losses. And now you're like willingly lowering prices to bring the customers in. But of course, investors want to see prices going up, which would translate to more revenue, which would translate to more profit, right? That's why sometimes you may think it may not make sense. But even like these social media companies, if like Netflix ups their price by $1 a month or something, you'll usually see the stock go up. Because that's probably going to translate to more business, more money coming in. Even though someone like you or I, as a consumer, may view that as a negative, right? And we'll say, oh, wow, they're charging us more now for this service. The stock should probably go down. People might get upset. They might close their account. You know what I'm saying? So we definitely look at it differently from consumer to investor. But in my opinion, a situation like this, I mean, somebody like Tesla, they already grew up. You know what I mean? They're bringing in billions and billions, net income positive. So that's what I mean. A situation like that, if they want to start trimming their prices and take a little less profit on each vehicle sold to try to completely shut out competitors, it would be more understandable, right? Because they've already grown to that point to where they could afford to take that hit. Someone like XPEV, I think that's the wrong way to go. I really do, man. I just personally, in my opinion, I think if you made a better vehicle, then what you need to charge is what people have to pay. That's it. You get what you pay for. You know what I mean? I would keep my prices up. But that's just me. That's just me. But like I said, if they're just trying to pad the delivery numbers while the revenue and the net income numbers continue to take hits, I just don't know personally how long they'll be able to sustain that. See, everything got downgraded here. Downgraded Tesla, NIO, and Rivian. EV sales growth is decelerating and much needed lower cost models are now expected late 25-26. We believe EV face a catch-22, juggling profitability and production ramps while undergoing elevated capital risk and the EV market in China cools. Lowered his growth outlook to 15%. Previous forecast of 25% just 2 months ago. Wow, that's a big drop. That's a 40% drop in your forecast. He said government subsidy cuts for EVs and higher interest rates and insurance costs are keeping affordability low and hurting demand. Now again, like we say, if someone like Tesla or even I know NIO I think is bringing in like several billion more than XPeng. So that's what I mean. If they're citing, oh, Tesla is going to struggle moving forward, NIO is going to struggle, demand is down. Like if these companies are struggling, what's to say XPeng is not going to feel it even more, if you will? Tesla was generating nearly 23% of its 23 revenue from China, right? So they have almost a 25% market share, you could say, potentially. Oh, no, wait, I'm sorry. It's 23% of its my apologies. I read that wrong. But has been facing price cuts of 10% to up to 15% by rival China-based EV makers, including BYD, Li Auto, XPeng. That has pushed Tesla to lower prices by up to $3,000 on certain models, but also cut production. Lost no less than 2 bulls a month when I turned bearish. Of 51 analysts who cover Tesla, just 33% are now bullish. And half are neutral. So that's a big shift from 1 or 2 years ago, right? 1 or 2 years ago, you probably had like 70% plus bullish. Now everyone, that's what I mean. Now everyone's backing away. They think, we did have a massive run, but now with potential negatives coming now over the next couple of quarters, these stocks may start taking a hit. So you can't stay bullish on a stock if you quote unquote know it's going to start facing adversity and start to drop down in value, right? You can't stay bullish on it. And that's what I mean. Now you got over 50 people watching it, and now only a third of them are bullish. In my opinion, that's a bad ratio. And that's why I'm saying if it's going to be bad for Tesla, it may be even worse for these other stocks as well. Partnership with Thailand. They're trying to branch out. I'm not bashing the company. I'm just looking at the numbers. XPeng likely to have a slow start in 24. Likely to have a slow start to the year, but could pick up steam in the medium to long run. In my opinion, that's at least 6 to 12 months. In my opinion. Deutsche Bank analysts, the intensifying competition among Chinese EV makers will continue, but XPeng's focus on capital efficiency, high iteration speed, and wide use of advanced driver assistance system technology will help the company's growth in the medium to long term. Considering XPeng weaker sales guidance for the first half, the brokerage lowers its price target for the company's ADRs to 12 a share from 13. And obviously likewise on the Hong Kong listed shares as well, but you can potentially see the writing on the wall. Tesla's China demand woes. I just feel personally, like I said, when we first started looking at a lot of these stocks, even seeing companies like Lordstown Motors, right, RIDE, seeing them just like go bankrupt, go out of business, get delisted. I just feel, in my opinion, I just feel like there's just too many players now. And if you're just going to be just another company, just, making an EV like everyone else, I just don't know if there's going to be enough market share for you to stay afloat, if you will. And now you have, as you see a couple of weeks ago, you see Alibaba selling over 300 million worth of shares in XPeng. Now, supposedly they're saying that they were going to use those funds for, technology and rolling into AI and seeing what they can do. And they very well might be. But also, me personally, if I had a couple of 100 million worth of shares of a stock, and I'm hearing all of this negativity now lately, in my opinion, I feel like they may be taking their 300 million in change out now before it's worth only 200 million in change. You know what I'm saying? So again, I'm not necessarily trying to bash this company, but if we're going to see lower lows and continue this sell-off, at least maybe going into next quarter if they beat, then Alibaba may be thinking, oh, we may have to get out now. So that could potentially be one way to look at it, but of course, only time will tell. Shares fall. Hinges on brand new sales. What is this? XPeng near shipment outlook. XPeng's battle against stiff competition in an oversupplied Chinese EV market keeps analysts relatively cautious on the outlook. Carmaker thinks new models and sales channel optimization could drive sales improvement from second quarter, but the analyst-led worry about the short-term impact, unfavorable market dynamics. If XPeng's efforts to optimize sales channels and push autonomous driving into mass market cars go smoothly, it stands to gain. Yeah, obviously. Against this backdrop, the analysts recommend investors keep a close eye on the upcoming launch of the first model under XPeng's new lower-priced brand due in April. Neutral. So, in my opinion, we could potentially go down before we go up, but we are in April, right? So we may have that announcement soon, so you may have a little bit of hype, a little momentum coming into the stock. Maybe in the immediate short term, you could potentially see that 751, that previous low. And on the technical side, again, in the short term, with the models coming out, they may potentially bring it down to 751, form the double bottom in the technicals, bring the volume back in, and then the models get released. You understand? So you could potentially see a run back up to maybe like the low nines, and it could meet up with this 20-day moving average before it potentially rejects and continues to trend downward, because it basically has been down. Again, you had this big run up here, even though numbers were terrible. This is what I mean. You know what I mean? Technically, these companies aren't doing what they're supposed to be doing, but they get rewarded anyway. And that's what bothers me, because then people buy in up here at, 15, and they're like, oh, what happened? I'm down 50%. What's going on? It's like, yeah, man, the stock sucked. It shouldn't have been up there to begin with. And if you did want to buy it, as you see, it was pretty flat for quite some time here around this 7, 8, 9 level. So that's why the stock should have stayed there. It should have never been up there. That's why when someone like me looks at the situation and people are like, oh, the stock's running, it's at 17. It's like, yeah, in my opinion, it should be half that. It's literally up for no reason, right? Company has massive losses, consistently missing earnings. But what are they doing? They're trimming down the cost to the consumer so that they can pump up the delivery numbers. And in my opinion, it's a shame. XPeng may see revenue and deliveries drop in Q1 due to marketing and supply chain adjustments. Company decided to phase out 130 underperforming sales stores and added 160 fresh partners, which may have a short-term negative impact on its sales capabilities. Company plans to expand sales stores to 600 by the end of Q3. Citi maintains sell rating, as the company may face serious challenges amid intensifying competition within the sector. This is why I feel like everyone's pretty much on the same side of the fence here. Again, great quarter, but we just don't know if it's able to be sustained moving forward. And that's why I think that we may potentially keep slipping. This article says 24 shaping up to be about affordable EVs. Seeing you have over the weekend, Tesla announced it will raise the price on April 1st, as well as Model Y prices in Europe. In China, Tesla is currently offering fresh inventory discounts to maintain the sales momentum. Tesla has been aggressively lowering prices for more than a year. Peaked at 30%, have plunged well below 20%. Even Tesla needs to figure out a way how to make affordable EV to combat its rivals and the EV market slowdown. See, that's what I think it is. That's what I think it is. Again, this is just my opinion. But in my opinion, I think the EV market is slowing down because now these vehicles have been on the road for years and years, and anyone who wanted one probably bought one, in my opinion. And you know, if you're going to make an investment like that into an EV, in my opinion, I would look for just one of the better quality ones. I wouldn't necessarily pull up all their sites and say, okay, who's got the lowest price, and just buy that one. You understand what I'm saying? So that's why I feel like, you know, there needs to be a level of quality there as well, not just the price and the cost. So the EV market slowdown, though, like I said, I feel like a lot of people who wanted them already have them. And even for Tesla, I don't know if they'll be able to maintain like the sales that they did previously. And they may have to, you know, expand other divisions and start generating revenue from different segments instead of strictly auto sales to consumer, in my opinion. But yeah, everyone's coming out. Cheap vehicles and bringing cheaper EV brands. On Saturday, XPeng announced cheaper EV model will launch within the next month, right? So this was, again, end of March. So they're saying in April, the announcements for these new models will be launched. And they will be priced in the range between, right, which is 14 to 21K. With this launch, XPeng is entering a highly competitive segment. Yes, we know. But basically, overall, you know, that's how I feel personally about XPeng. And I think next quarter may tell us more. But in my opinion, you know, if they brought this down like $1 lower than where it is now, before it found the bottom and had a little bounce and momentum going into next quarter's earnings, in my opinion, that would actually make sense to me. And also, just one last time to reiterate, we have been rallying in the markets for several months now, off of, in my opinion, kind of not a realistic reason. Because again, people citing cooling inflation and Fed rate cuts, and inflation is not cooling, in my opinion, and rate cuts never happened. So that whole rally is standing on weak legs right now, in my opinion. So just to reiterate, we are near market highs. So if markets do begin to really sell off, chunk down, have a big correction, I think something like XPEV could definitely take a hit and potentially even see it in the 5s. But, you know, for right now, I would say we could potentially see maybe about 10% drop from here. Worst case, maybe, hopefully. But you could see maybe 10% drop to like those low 7s. And then, like I said, it could potentially flatten out and then start rallying going into next earnings. We could potentially make 751 double bottom and then bounce a little bit. And again, they're launching those models this month, so that may pump the stock up for a day or two. But very quickly, we can see here we're right near the bottom Bollinger Band. We started to trump it out, potential flattening. So we could bounce up from here, but the MACD crossed a couple of weeks ago, kind of been trending downward, beating up the stock. RSI came all the way down to the low 30s, had a little bit of a bounce here today, still sitting at about 34. So now we could potentially chunk down and drop to 30, sub 30, or we can rise from here and maybe get back to that midway 50 range, which again could potentially translate. This is the 1-year chart, by the way, bottom fib 857. So we could potentially gain a little bit of momentum here. Only time will tell. On the weekly, RSI down as well, 37.25. Didn't really get that low before hitting the bounce here. So we had, looks like this upward consolidating channel, and then we broke down to the downside. Now we have very slight movement here. So if we kind of remain flat and just kind of go up and down the next couple of days, that may potentially form a bear flag, which may break it down even lower. So, of course, I'm predicting, but, only time will tell. I'm just trying to lay out a couple of scenarios. And the MACD, yeah, has been falling for several months here. Looks like we're potentially flattening out. So we could maybe see some action there, but bottom Bollinger Band on the weekly, 496. I don't know if it'll necessarily get that low, but again, if we do drop lower over the next week or so and hit new lows, in my opinion, I wouldn't be completely shocked. And quickly, before I let you go, we'll look at Biora Therapeutics, which, as you see, chunked down, now lower than the apex of that descending triangle we were looking at, about 78, 79 cents. Stock breaks today, drops to 67 cents, down over 33% here to close, up at 73.5 cents, up a little bit, about another cent here after hours to 75 cents, but we hit those new lows of 67 cents. In my opinion, I said, even with the company posting earnings, I said, in my opinion, I would be wait and see. People asked me about this. I think we said that we have some time, maybe. And, we could potentially get a better price a couple of months down the road here. And the company announced today that they do a direct offering. Shares were down. Company entered in definitive agreements for the purchase and sale of 5.5 million shares at $1.10. Shares dropped immediately to that 80-cent range and then continued to drop. A couple of unregistered warrants to buy up to 5.5 million shares. Exercise price of $1.10. Will expire 5 years from the date. Proceeds from this offering expected to be $6 million. Tends to use the proceeds to support its operations, complete its ongoing trial, make further investments in the development of its oral biotherapeutics platform, and for working capital and general corporate purposes. Yeah, I don't know, man. I don't know. That's why I said, in my opinion, we have some time, and I would play wait and see. And again, those earnings came out not too long ago, just Tuesday last week. And you can see stock was up $1.30 and then immediately started dropping to the low ones. And then, of course, you have your announcement today, and we dropped down to 67 cents. So I'm not exactly sure how low we can go. If we want to just quickly draw out our trend line there, connecting those bottoms. 30 cents. I don't know if we're going to drop down to 30 cents, but now we have a market cap of 20 million. I don't know. Like I said, too hard to call. And now they did the offering, right? So now they're sub $1. Potential reverse stock split. Oh man. It's just not what you want to see. And again, I'm not going to say, oh, I'm a genius. It's not really the route I'm going to take, because obviously I wasn't really sure that they were going to do another offering or reverse split or something. But I was just saying these things are possible. But I did. That's why I did say, in my opinion, I would be wait and see. I would be wait and see. And even if you bought it today up at, 70, 75 cents, and then it dropped down a little bit afterwards, obviously it's still much better than $1 plus. That's why, like I said, I saw this potential descending triangle. Seemed like the company was still struggling. Then they supposedly had a little bit of positive data. The stock absolutely exploded, but immediately came right back down to that dollar within just about a week or so. So that's why I said, in my opinion, I'm really not seeing the strength here, and I would be wait and see. And now, boom, direct offering today. Again, if you don't understand, they bring more shares to the market, which dilutes the stock. And then investors potentially start jumping ship, because now you're bringing more shares to the market, which in turn, kind of, in my opinion, basically translates to existing shares are worth less. And of course, the company has to do the offering because, as you saw in the article, they had to raise a couple of $1 million to help out other clinical trials and, for any other costs they have on their hands. So that's why usually when you see an offering like that, the stock always takes a hit for the most part. But we have a very, very flat MACD. Looks like we just kind of curled to the downside now, but we can see bottom Bollinger Band of 71 cents. We hit 67 and then had a little bounce. So we may potentially hang out around this 70-cent level. RSI down here at 33. Again, now with this news, I don't know if you really would use the RSI as an indicator, because now the stock may, again, continue to kind of just stay down or stay flat for the next couple of days, at least, in my opinion. So we could potentially see a drop down into the 60s and maybe even hit newer lows. But of course, MACD now towards the downside. We broke well below this 50-day moving average. Our Bollinger Band's trumpet, so now we could maybe see like 80 cents, a quick little rebound to try to head back towards the direction of the bottom Bollinger Band. But in my opinion, I think it'll reject and actually go lower back into the 60s. RSI on the daily sitting here at 33.5. Again, in my opinion, not really what I would be using for a stock like this. But this is why I said, in my opinion, last time I looked at it, a company like this, and again, I'm not saying years down the road they may potentially become a powerhouse, but it's these biotechs, all these therapeutic companies, all of these pharmaceutical companies that you see, again, very small market caps, usually dealing with big losses. It takes several months, potentially years, for them to get the data that they need to potentially bring these products to market. Big losses, no revenue coming in, right? So this is what I mean. When you see a situation like this, in my opinion, this has to be kind of screw you money, to where it's like, okay, if I'll put a couple of thousand in here, if it works out, great. And if they happen to go out of business and I lose all that money, I'm not going to feel it at all, right? In my opinion, that's the type of capital you should be using for a situation like this, almost similar to the OTC stocks that we look at, the pink sheets over the counter, right? Because we know even if the numbers look good, the stock can just continuously sell off. So if we're dealing with very, very high risk, in my opinion, it really should be with extra money. And again, even if you do own a big chunk at a low price, now with the stock sub $1, we may potentially see reverse stock split. But I'll end it there because I spoke way too long, like usual. But I wanted to just look at XPEV. And again, this news came out of this offering on Biora Therapeutics. So I thought I'd give a quick update for you guys on that. But yeah, I'll end it there. So once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're very volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.